lenders understand that finance for property investment is a good lending solution for them.
Exactly.
As you know, there's a shortage of supply, certainly in South Australia, and so all lenders that I know are still quite aggressive out there, trying to ensure that their products are competitive. Maybe just talking more about the finance landscape at the moment and where things are going. The last, if you like, Angelo, the last 12 to 18 months has seen a lot of change in the finance space. Obviously, the Westpac St. George merge was significant because it meant that certainly many commercial components of what they did were overextended, and therefore they've shuffled around. They reduced their loan-to-value ratios significantly within the residential space as well. But that's starting to ease up as well, and they're pushing back up to the 95%, which they never did before. Obviously, there was the Commonwealth Bank Bankwest purchase of sorts, and that also has seen some significant influence or significant impact on where things are going. It certainly made things a lot more conservative. Bankwest used to be quite aggressive in both the commercial and the residential space, and they're a lot more conservative than they have been in the past. So that's seeing a lot of changes. You've also seen a lot of during the GFC, a lot of second-tier lenders and lenders that basically relied on the wholesale market, purchasing money overseas against mortgage-backed securities. That's really dried up, or it's become very expensive, prohibitively expensive. So some of those lenders have fallen off the back. Other lenders that maybe just sat on the side. As you know, there was the Bendigo Adelaide Bank purchase, and Adelaide Bank was really sitting on the side, just trying to weather the storm, so to speak. Now they're coming back ferociously, really trying to build up their market share, and that's good. It's positive for the market. So I guess there's still a lot of competition out there. Competition is good for consumers in every respect. I think the lenders have acknowledged that third-party lending, as in through a broker or a finance consultant, is very important. We comprise essentially 40% of their new business. So that means that we're very important to them as a generator of new business. But I think with now that the dust has settled, they always talk about the four stumps, or the four pillars of finance, be it ANZ, CBA, obviously Commonwealth Bank and NAB. Yep. The four pillars. Now it's essentially become the two pillars and the two stumps, because really you look at Commonwealth Bank and Westpac, and they're just so much bigger. Yeah. They're just so much bigger than the others. So what it means is, I think you'll find, and I think both the Commonwealth Bank and Westpac have realised that they probably need to give some market share to the others, not because they want to, just because they've realised that they probably have too much market share, and it's at the moment starting to affect them in a negative way. Right. So, and I've heard this from the lenders themselves. So I guess we're still probably going to see a few more changes, but the bottom line is still a lot of competition out there, and that's positive. Okay. That's positive for the consumer.
All right. David, just before you mentioned about the GFC, and America really took a tremendous hammering in the last few years. Now, a lot of people say that this is because of their really relaxed lending policies, which without question played a big role in that. But would you also say that what also played a big role that people don't really tend to talk too much about is the oversupply of housing that they had at the time? The two together were almost a recipe for the perfect storm.
Agreed totally. And there was a huge oversupply, but also the relaxed lending. I mean, you've heard of the ninja loans?
Yes.
The no income, no job or assets, yes, essentially, and they were lending 120% on properties. I mean, I guess, there were too many people in the US that were just using their property as an ATM. That's essentially what it was. You're just getting cash out. And if you can borrow up to 120%, why not? It was a recipe for disaster, and it obviously came to haunt them. I think we're in a very different situation over here. Our regulatory authority, APRA, is very vigilant. So it means that the lenders have to have certain amount of cash holdings and all that sort of thing. So it ensures that there isn't irresponsible lending as much, certainly as it has been in the US. Yeah. Like you mentioned, there was a huge oversupply. There's an undersupply here,
and that's probably why we weathered it so well.
I think so. I mean, listen. I'm sure the majors probably have some losses associated with it, but not the kind of losses that other lenders have had around the world.
Okay. One thing that we haven't mentioned so far is, what is the advantage of using a finance broker, a good finance broker, as opposed to going to just a bank? And I think we touched on it from the point of view of cross-collateralization. Why don't you tell us a bit about that?
Well, cross-collateralization is just one small aspect of where, I guess, a finance broker or finance consultant can guide and advise their clients. We are a resource to our clients, right? So we don't act for one particular lender, we act for the client. That's the most important thing. The other important thing is to note is that the majority of finance consultants out there are still working on commission only. So that means essentially it doesn't actually cost the client anything directly out of their own pocket, but they've got the best of all the worlds, as in all the lenders, because we can advise them on the best solution accordingly. But thirdly, and I think this is probably the most important one, it's all very well for us to not charge them as such directly, and also not to be working directly for them and giving them all the options. The third one, and this is probably the most important one, is that we are there as a resource to them throughout the process. So we can very quickly tell them what's in their best interest and what isn't in their best interest, because, you know, for example, certain lenders will just be trying to sell their own products because that's all they've got to sell, you know, where we can say, no, actually everything that Commonwealth Bank is offering here probably doesn't suit you, or anything that Westpac's offering you probably doesn't suit you, you should probably be looking at this or whatever, depending on their circumstances, if that makes sense. So we can, I guess, see the situation holistically and be able to guide them accordingly. And like I said, you know, you might say to go to a lender and they might just be looking at it from a transactional perspective. Yes, we'll process this application and we'll get this loan for you to purchase this property, whereas we can look at it a lot more strategically in building up their portfolio and making sure that we set up the structures accordingly.
Okay. As you said, the finance broker is really working on behalf of the client, whereas the bank may be more working on behalf of themselves.
Correct. Yep. Correct. I guess in the when certain lenders market themselves, it can often be very misleading, and you may have heard about this whole concept of comparison rates. So whenever a lender, and certainly it's been the case when lenders have said, oh well, our rate is 6.7%, where in this comparison rate is actually 8.5%. And what does that mean? Well, it essentially means that if they're charging $1,000 application fee and they're charging $100 a month or whatever, the actual rate is actually a lot more than what the rate that they're quoting. Comparison rates probably won't be as important now that we've got this new legislation that's come through as of July with regards to responsible lending. But it is very important as a finance advisor, finance consultant, that we can explain to the client all the ins and outs. So for example, if they said, well, this rate just seems to be slightly more expensive than this other rate, well, it may be. But guess what? You're only going to need it for 2 years or so, and the exit fees are going to be far less with this one. So in the long run, it's going to save you a lot of money.
Exactly.
This one doesn't have the annual fees where this one does, etc., etc. So there's all the ins and outs. So therefore, it's not as simple as just saying, oh well, this rate's cheaper, etc. There's actually a lot more to it, and I think it's important for us to be able to provide that guidance to the client ongoing. I guess it's important from our perspective, because this is what we do day in, day out, is for us to provide that ongoing advice to the clients so that they're aware of all the various facets associated with finance, because it's not as simple as just, this is the loan, this is the interest rate, and this is the property. There's often a lot more associated with it as well. Angelo, I'd like to maybe just in conclusion say that I think the finance space is very positive at the moment. Like I said, it's very competitive out there, and I'm very optimistic about where things are going. One very important thing is that, as I mentioned earlier, this new legislation that's come through for finance brokers, finance consultants, anyone that's essentially associated with credit, is that there are far more rigorous regulations associated with that space, and that means that I guess all those cowboys, all those that probably shouldn't have been in this space in the past, are probably going to get pushed aside. And that means that I guess that the consumer is going to get better advice. They're going to get it from professionals, because that's who we are. And it also means that I guess the people that are in the game should be in the game, if that makes sense. But also I think the lenders seem to be opening up a lot more with regards to not quite the sluice gates, but they're certainly starting to open up the pipelines to ensure that there's a lot more funding out there available for clients who are keen to build up their wealth portfolio.
Very good. Well, on that, look, thanks so much for making the time. It was great speaking with you, David.
Great speaking with you. Thank you, Angelo.